Good afternoon and welcome to this special edition of Halftime Talk. I'm delighted to be joined by Walter Simpson, the Managing Director of CCED, at least for another few days in his final exit sort of interview, if you like. It's an absolute honor to have worked with Walter over recent years and an even bigger treat to have the chance to have some final words together. So Walter, welcome.
Sean, thank you very much indeed. A real pleasure to be here. Yeah, it's great to have had that relationship over the last 7 or 8 years. So thank you.
Well, Walter, I suppose it's one might say it on many occasions. It always seems like a very opportune time to have a conversation. I mean, this last week has been really another one for the history books, and we've had a few in recent years, whether it be the big traumas of the Russian invasion of Ukraine and how it disrupted global energy flows, or COVID, how it closed down every market in the universe, and so forth. Here we have the great tariff disruption, and within it or outside it, the OPEC plus decision to increase supply, this sort of change in direction that we've been together on with OPEC plus, and of course Oman and CCED are at the end of a long string of OPEC plus oil supply policies. And here we've had the big shift in the last week. Literally, April 1st, OPEC plus decided to increase supply, and then in an announcement last week told us that from May they were going to accelerate the supply increase. Your thoughts on that shift from a point of view of sort of market fundamentals? It's coincided with a big drop in price. How it all goes together, where it goes from here.
Ooh, it's a big one, isn't it? And fascinating. But I think, again, history is a great teacher. And I look back on it and think, okay, but the US was founded on tariffs. So this isn't something new. The first act that the US Congress put in place was their Tariffs Act. And at the time, it was all about funding the federal government and protecting a nascent American industrialization. So nothing new in that. And in fact, if you go and check out the history books, their federal funding of government came from tariffs all the way through until the beginning of the 20th century. And it wasn't really until taxation grew and the US industrial might sort of be able to compete on the world stage that tariffs became unnecessary as a tool for funding the federal government. And so it was only after the crash in 29 where this first sort of tariff war was introduced. And that failed dismally.
Which gets referenced a lot. I mean, I never knew too much about it until the last few weeks, where everybody's talking about these 1930s reference. That was the sort of comparable time window.
So nothing new, I guess, is where I'm coming from this one. And the results of that was a 2/3 drop in trade between the US and Europe. And it strikes me that we're repeating that. And the first casualty immediately were the stock markets, as people got worried about what was going to happen. And of course, the oil price, because they're saying, it could be a recession, people won't need oil. So, we're down at $65 for Oman, lower for the other benchmark crudes. And that's a real challenge. And of course, that coincides with OPEC saying, we can increase production because the market's looking good. I can't help feeling OPEC Plus are going to have a relook at increasing at the moment. But who knows? It's very unpredictable about what the US will do. Certainly, the rhetoric is there's always a deal to be done on a country basis. And that certainly seems to be where the administration wants it to be. But it doesn't strike me as something that's really going to be successful, this tariff war. It doesn't strike me that actually it's a great way of driving protection of the industrial might of the US. And the federal government certainly doesn't seem to need the money because taxation's covering it. So I'm not sure it's the right tool at present myself, but certainly it's having a tremendous impact across the global markets. And it's going to create some problems for people, certainly in our industry with the low oil prices.
If you look at those sort of two things, this policy by the US administration, the protectionist, which now seems to be delivering at what's called a trade war, China retaliating, Europe about to retaliate, and so forth. My first question, and given the sort of sense of reflection of this interview over your career, over different moments, and the OPEC decision, similarly, looking at it separately. But what my point that I'm trying to get your insights on are these historic inflection points? Are these big, because when they happen, of course, they feel like you just articulated off the bat that no, this has happened before. But I'm wondering, this protectionist policy is not new, as you say, it's not new, but in the recent times, Trump first administration brought in the first sort of era of China's not a ally trading partner, it's more of at least a serious competitor, if not a rival. And now we're kind of at the 2.0 of that sense of competition on a grand national, an international scale of trade. So my first point is on that tariff corridor. Does this feel like an inflection point? Is this a historic moment of change?
I feel it might be. Can't give you a guaranteed answer either way, but I
Sure.
feel it might be. And I feel it's because there's been a fundamental shift from the administration in the US about the way it looks at the world. There was definitely, from the end of the Second World War, there was the free trade view, and there was this view of being a leader in how we're going to deal with the world, and we're going to work our way through this, build relationships, make sure the right things are being done. The recent administration has very much been, power is might. I've got the wherewithal from a military and an economic perspective. You're going to do it my way. And that seems to me quite a fundamental shift in how the US has behaved. And then you look back in history when people have done that, the trade wars from the 1929 one resulted in a recession and problems in the 30s, likely so from the challenges. I kind of thinking we're going the same way. And we're going to have those challenges as a result of this, unless we start to get some solutions pretty quickly and we don't start off with a trade war. But I look at it in the perspective of, which countries does it really hurt badly? And let's take Oman for an example. Well, Oman is still heavily coupled to hydrocarbons in its economy. And hydrocarbon revenue is crucial for the country to start working on how it attracts non-hydrocarbon industry and how it decouples itself from hydrocarbons. And while, they're setting up a sovereign wealth fund, you have to have a very, very large sovereign wealth fund so that your portfolio income from that can replace the rent you get from hydrocarbons. And that's true for every country. Even Norway, which probably has the most successful sovereign wealth fund going, still is going to have to do really well with that to replace the rent from hydrocarbons. So, this particular region, the GCC, almost all the governments are heavily dependent on that hydrocarbon rent. Now, taxation is becoming nascent in building an alternative, and investment is starting to come in order to build the economies outside of the hydrocarbon sector. But if you have a trade war that stops investment going into foreign countries, makes it difficult to take capital elsewhere, then that's got to have an impact on the Gulf here in terms of how do they diversify from hydrocarbons. And, the fiscal systems here are all rent-based, they're not taxation-based. And so I see some real challenges for the region if this goes into a global recession and a trade war. Oil prices down, investment down. That could be a major shift for what happens here, coupled with, the US military might saying, we're going to stamp on the Houthis, unless you Iranians do what we say, we're going to have this come to you. I worry about how all that fits together.
The other point of historic kind of moment is, I always thought that before the end of our careers, we would get to the point where the OPEC plus, as it has become known, but OPEC in particular, would finally arrive at the date where they would sort of put themselves out of a job and move away from the managing supply to elevate, maximize price, and move towards the inevitable low-cost producer being the largest producer, and let the chips fall where they may. I'm wondering if this is that moment, or have we turned onto that road in the sense that what is historically a moment is that China, which has been the engine of global demand growth for the last 30 plus years, is no longer that engine. It's at best flat to maybe a little growth. Where do you think this moment, this decision by OPEC Plus to increase supply into a demand weakening window, is this a historic inflection point for their policy management of the markets, or just another twist in the long road?
Ooh, I think we'll find out whether or not they change their mind. If they stick with it, I think that's then it could well be an inflection point. I'm not clear it will be myself. I think there are some risks with it because the economies of the OPEC countries, certainly, and OPEC plus maybe bar Russia, are very dependent on their hydrocarbon revenues. And so I was thinking that inflection would happen once the economies had been diversified enough that, I'm not saying they could do without hydrocarbon revenue, but it wasn't such a big engine within the economy. And then you can start saying, okay, well, the other sectors can keep up the slack. So if I lose revenue here, I'm still okay because I've got other revenue coming in. We're not in that place yet, I don't think, in many of the GCC and the OPEC countries. So I think it will be a challenge for them if they go to the low price sells all. Actually, many of the countries are producing as much as they can already. And if the price goes down, then all they do is get less revenue. So it doesn't really help them. It's
Well,
not
that's kind of the other side of that coin, which sort of brings this conversation down to the ground a bit, is that Oman and many other countries within the OPEC plus universe are producing and have been producing at whatever their full capabilities have been. And yet there are some countries, notably where I sit, the UAE, which is carrying this big lump of idle supply that they've spent a lot of money to build. It seems that if you look at this, the question from the other side, can you sustain any longer carrying that scale of idle supply? Abu Dhabi, Saudi Arabia, at some point that seems nearly, regardless of the wider dynamics, an unsustainable bag of heavy rocks to carry.
It becomes a challenge. Again, the UAE and Saudi have been more further down the curve of diversification, shall we say. They're less dependent on hydrocarbons than other countries in the region. I'm not saying it's not very valuable to them. So that helps in terms of that. But then again, I think it's back to the price dynamic in terms of, if I bring it back on at $10 a barrel, is it really worth it? What price do I need for it to be worth having that production in the market? And that's going to be an individual question for the countries themselves. At what point does it make it not worth their while bringing it in? And it's a difficult one.
If we look a little bit, Walter, drill down, so to speak, into your time in Oman and the journey of not only CCED, but the whole of the macro picture there and the whole of the oil industry there. When you sort of came into that role, obviously, Oman as a whole was struggling to recover from a very deep decline in oil production, dealing with a lot of heavy water cut in the reservoirs, and enhanced oil recovery was so critical to rehabilitate the production capacity targets there. And so maybe you could just tell us a little bit of the journey that Oman has made over the years you've been there. Where do you think it's at now? Where can it go? It sort of got back to where it was, but where could it go?
So I mean, I think it's been very successful in getting back to where it was. It's attracted investment. It's still a very good country to invest in. Very stable fiscal regime, very supportive government in terms of investment, very attractive to investors. There's still a number of people come to speak to us about coming into the country and how they could get in. So I still see it has that reputation to attract investment in the oil and gas space. There is a push for exploration. We're investing heavily in exploration, as are other companies here. And there is a need for an increase in gas production. Fourth train for Oman LNG's been sanctioned. That's going to need somewhere around 3.5 to 4 TCS of gas to supply that train. So there is definitely optimism here that the industry can keep going and can keep the investment going to drive oil production at least where it is, and certainly gas production to increase it in order to meet the demand of the trains. So I think they've done extremely well in that. But with that, the change I think I've seen most of is the realization, and I don't mean that it's the first time people have thought of it, but the realization in the Vision 2040, in the way the government's thinking, in the way the ministries are thinking, is that we have to come up with strong plans to decouple, the word I used here, from the hydrocarbon revenues. And we've got to make sure we keep the revenue from hydrocarbon coming in so we can fund the alternatives to make sure that we're not dependent on hydrocarbons in 20 years' time. We've got to find a way to do that. Otherwise, we're going to be out of business. So I think that realization and those firm plans, that Vision 2040, the energy diversification, the targets set around hydrogen, around wind power, around solar, all of those things, I think, go to a realization of how this economy can be changed. Now it must be changed. And that has been a huge change, I think, over the last few years.
And you said there in your commentary that Oman, and it has been a kind of a standout in attracting foreign partners, production sharing agreements, the joint ventures, great opportunities from many companies over many years. Even PDO, I think, is still the only NOC in the region that has actually an equity joint venture with foreign companies. There's other partnerships in the region, but actually an equity ownership. What are your thoughts? What does Oman need to be cautious about as they go forward into the future to ensure that that scale of sort of partnership and international investment and FDI continues to be very attractive place for international capital to flow into the Omani energy sector?
So I think it's modelling the behaviours that the oil and gas ministry has had, which is about that collaborative, supportive, win-win solutions. The mining industry is starting up here. It's nascent, but it's about making sure that same kind of behaviour and not the might is right, the government's going to win and we'll pay you a rent that we think suitable. It's making sure that that investment is good and managed and that you've got that sanctity of contract, that you've signed the deal, you know what the deal is, and you know both sides are going to stick to it. That's an incredibly valuable trust that's been built. Like everything to do with trust, it only takes one bad decision to destroy trust and then years to rebuild it. So it's about making sure that trust remains, and then you can keep attracting these international players to the market.
If we might just personalize the story a little bit and get your sense of your journey, Walter, over many years, starting your career with the national energy sector in the UK and then going into this global experience with international energy companies, British Gas, and so on. And now sort of coming to the end of your journey as a CEO of an independent in the Middle East. Where do you think the industry is as a whole, particularly on the larger end, and where does this independence then have opportunity? We're seeing on the larger end, the big ones that you would know, Shell and BP. Shell took over, acquired your former company, BG, and they have kind of backed away from the energy transition in recent weeks and months after making a big bet on it. They're looking at maybe listing in America because there's a better value return in terms of equity valuations and so on. Where do you think the majors are at, the Europeans, your former peers, if you like, and then maybe we'll drill a little bit into the independents, the industry as a whole?
It is fascinating. So I mean, COVID was a step change in the industry in terms of it got people thinking about energy diversification, and the majors looked at it and said, "Oh, we can go into other renewable energies and we can invest in those, and we've got the energy skills and we can do this." And I don't doubt they can do it, by the way, and certainly they have the capital to do it.
You mean like becoming utility operators and battery
Well, it's
company owners
maybe
and
not utility, but certainly energy generators.
okay.
Utilities have generally been controlled with pricing and regulatory frameworks that make it difficult, and many of them were in the regulated, distribution utility business and got out of it because of those regulations. But I think what became apparent to investors was the return from oil and gas is a different scale from the return from renewable energies. And that then starts to change your view on where you want to invest your money. And so I think that's really been one of the drivers in the majors moving away from the renewable energy and going back to the oil and gas focus, because for every $1 million you invest in oil and gas, you get a much better return than you do if you invest in renewables. And so I think that was the driver. And clearly with the change in the US markets, it's much more acceptable in the US than it is in Europe. Now, part of that, of course, is in Europe. Europe's decoupled from hydrocarbons. There's not a single economy in the European Union that's dependent on hydrocarbons for its growth. There's other sectors. Now, they do need hydrocarbon importation because we're not producing enough in Europe, but their individual economy is very robust to that and can afford to pay the prices. So I think that's been part of the driver for the hydrocarbon industry and going back to focusing on hydrocarbons rather than renewable energy. What I do feel, though, is for the independents that are not listed and are private companies, you have even more opportunity. You haven't got that strong investor base, that NGO base driving different behaviors. You can actually focus on your core skills and what you're good at. And so I think what we will see is more of the investment from certainly private equity funds and people with money to put into industry going into the independent private sector oil and gas companies rather than into the listed public sector ones.
Your thoughts on the outlook, particularly for the majors in Europe, Shell and BP? BP has had a more difficult path in recent years. What are your thoughts on the whys of that versus others, Shell, who've done reasonably well, but both are looking at the lots of reports that Shell looking at a listing in the US, a lot of talk about BP being a target of a takeover. Where do you think they go? Do they have a long-term future? Where do you think the outlook for them, or what errors do they need to stop making? Or
well, that's a big question.
it is.
I think from BP's perspective, I think they lost their way a little bit, if I'm honest. They weren't clear about what they wanted to do, but that's not necessarily new. I mean, you'll remember Beyond Petroleum. I mean, that goes back a long way. But actually, Beyond Petroleum was more of a slogan than anything to do with actually what was going on within the organisation. I think there was a change again after COVID. There was a move to actually we're going to stop so much investment in oil and gas, and we're going to focus on renewables, etc. And I think that was the first sort of, well, hang on a second, I didn't invest in BP so I could have my returns reduced. I invested in BP because I wanted oil and gas returns. I think they faced that challenge. I think that was the first one, combined with some of their internal challenges around people. So I think that was one of their issues. Now, what does that mean for them? I don't know whether they'll be taken over or not. I mean, it's still a big chunk of money if you want to buy BP.
Yeah.
But what I do think will happen is there will be more consolidation in the listed oil and gas sector.
Well, that's it. I was going to ask you about that because, of course, your former company, very successful, British Gas, was taken over. But we haven't seen that much consolidation in the industry since then, despite what you would think would have been different times, a good opportunity, particularly coming after COVID when valuations were quite low.
I don't know about that, if I'm honest. Anadarko were absorbed by Total.
That's true. Okay,
absorbed by Oxy.
Yeah.
It's still going on. So I'm not sure that's true.
Yeah, that's a good point. Yeah, within the shale patch, you had Pioneer, I think, also taken over by I can't remember who was.
The big players in the shale patch, the people who took over them are the big players again. So
fair enough.
I still think it's going on. I think it will continue.
The consolidation. I mean, it does seem like the more, I mean, maybe the NOCs get into that. I mean, that's another big change in your journey through your career, and as you come to the end of this part of it, at least the NOCs have emerged now as now increasingly this INOC word, the International National Oil Company, with the likes of ADNOC and Aramco publicly traded now, and ADNOC going global and acquiring assets all over the world. How do you see the future of those two things coexisting with the international players?
Again, it's a reflection of the maturity of the industry. I'm honest. The national oil companies were put together to try and get some of the control on the natural resource within that country. Many of them were not great to begin with, and they used foreign expertise to come and help them make things work. Over the years, they've matured, they've developed the technology and the capability themselves, and then they've realized, actually, if we can compete in the international markets, we don't just have to focus on generating value internally, we can also generate value externally. Let's start doing that. I think it will grow as they get better at it, and of course they'll have, certainly the big ones will have the capital available from their domestic revenues to be able to start competing in the international market. So I think that's going to happen.
And particularly, you're seeing it now. I mean, on many fronts, chemicals and so on, but also you're seeing it on the trading side, where OQ Trading, which is one of the first ones that came, the national trading companies, and now Aramco Trading has been around a few years now. ADNOC Trading joined that company in the last few years, and this year we've got KPC Trading, where that reached right through to the last sort of barrel, last dollar, if you like, in terms of the full value chain. Does that disrupt the industry? Will it, do you think? Where does it go as a potential,
I
like,
don't think that as a disruption to the industry. I just see that as a normal evolution, and where the particular specialist comes from as a background, I'm not sure that matters too much. So I just think it's a natural evolution, and it just brings more players to the market and brings that competition. I think that's a good thing myself.
Yeah, it's certainly because you also then have a competition when you think of talent and then that expertise, particularly in trading. It comes from all over the world, as it did the previous generation in terms of the engineering side of the upstream. Now you're seeing a lot of that international talent in the trading side, and over time, like OQ Trading, which was probably one of the pioneers, that has become led and run mostly by regional talent, now competent and capable to perform. Just closing, talk a little bit about CCED, Walter. Of course, this has been your baby for a few years. You've obviously curated it into its current healthy state. How does that feel, that journey for you, as it comes to a close and you hand it off to your successor?
Yeah, little sadness, if I'm honest. Yeah,
Sure,
can't
of
deny that.
course. Yeah.
I'm very proud of the organisation. I'm pleased with the development. Much more mature organisation than when I came here. Much more capable. But what I'm really pleased with, and probably the thing I'm happiest with in my time here, when I came, we had 78, 79% of the organisation were nationals. And senior management was only 32%. As of today, we're at 92% nationals as an organisation and 75% senior management. And so what we have is a more capable, more mature organisation, but we haven't done
it by sustainable, you would say, to use that word.
Yeah, we've done it by bringing and developing nationals into the organisation. And in fact, when I leave, there will only be one expatriate on the leadership team of the organisation. So I think that's been a tremendous journey and tremendous reflection on the capability of Omani talent, if I'm honest. And so very pleased with that, I must admit.
That is a wonderful legacy, and I know over the years we've worked on some of these projects that you've been committed to in advancing the skill set of the graduates and the young nationals to be able to take on these responsibilities. Because of course, as you know, as a drilling petroleum engineer, these are challenging reservoirs that Oman has to continue to manage and harvest. The in that do you is there an outlook, do you think, where Oman can continue to grow? We sort of talked earlier a little bit about it. It got back to where it was, and that in itself was a huge success. We've seen UAE, Abu Dhabi extend its production capacity quite significantly. Kuwait is now heavily focused on doing the same. I know they're different scale reservoirs, but is there an outlook there for Oman to march on?
Well, yes, there is, but it's on a different scale from the others, as you've already highlighted.
Sure.
You know,
But it's a huge country, still lots of areas
it's a
to
big
explore,
country.
one would think.
It's very complex geology. It's very interesting
Yeah.
geology. It's a geologist's dream here. They just love coming to look at the rocks here. But I can speak for the blocks we operate.
Yeah, exactly.
We've had a very successful production fairway, and we're still finding opportunities, albeit they're not very big, but we're still finding opportunities within that production fairway. As I mentioned earlier, we recently acquired a huge amount of seismic in other areas of the block, top quality, state-of-the-art seismic. And we've got some of that processed and we're prospecting on it. We're processing other bits of it, but we're seeing opportunity within that. Many of it is technically challenging. It's difficult to understand. It's going to be expensive to drill on, but there's opportunity. And I think that's true for Oman. Every time you bring different expertise to the table to have a look at it, people see opportunity. And that's continued through my tenure here and prior to me being here, and I expect it to continue after. So I think there's every opportunity Oman can keep its production where it is, growing it, well, maybe a little here and there, but I don't think it's going to grow on the scale of the Abu Dhabis and
Right.
but I do think there's that opportunity because of the geological complexity. There's always a chance you'll find something new. There will be a spurt on the back of that, and then people will develop it. So I think there is that opportunity here just because of its complexity and the age of the rocks that you're dealing with here. I've never seen anything like the age of the rocks here. It's phenomenal.
I know every geologist I know in the Gulf, they all talk about the rocks in Oman. Well, it's 1,500 kilometer size country with mountains and all sorts of opportunities. Wrapping up, Walter, what feels like next for you? I mean, your golf game is pretty good already. Does it get better? Do you get to discover all of those Irish golf courses you've yet to see, or what's on the horizon?
Uh, Time off is on the horizon at the
Yeah.
moment. Yeah, just gonna take a rest. I've no
Well, you've certainly put
desire
in
to
the
take
hours,
on
no
another
doubt about that.
executive role at the moment. Yeah, take some time off. Oh yeah, play a bit of golf. But actually, I've got my own project today. I've got a house renovation project that's underway, so I need to finish that off. Yeah, and then we'll see.
That will certainly swallow up time. I mean, you sort of scratch the paint off one door, it's suddenly like, oh well, that one over there and that piece over there. So you'll be basing out of the UK then? Will
I'll be
that
based
be?
out of the UK. That's correct. Yeah, going ahead
Okay.
home. It's been a while. I must
Yeah.
admit, I've been lucky enough to spend well half of my life living overseas. I've thoroughly enjoyed it. But what it's meant is that my retirement plan does not include travel at the top of the agenda.
Exactly. Not item number one until the knocks on the door, I'm sure that will come saying, well, Walter, you're pretty good at knowing about this area of reservoir engineering. Could you help us with something? It will be wonderful to spend time, I'm sure, for you with your close family and your now adult children who will be progressing through their own lives, and having you close by, I'm sure, will be a thrill for them. Walter Simpson, Managing Director of CCED, thank you so much for joining us. Thank you for your partnership, and bon voyage.
Sean, thank you very much indeed. It's been a pleasure. Thank you.